Hey everyone, how's it going? Dan Russo, Chief Market Strategist at Chaikin Analytics. Hope everybody had a great weekend. Wanted to touch base, some updated thoughts as the new week begins. It is about 20 after 10 on Monday, March 1st. New week, new month. Always a good opportunity to pay attention and kind of take stock of what's going on within the markets. I know that's what I do for a few of the strategies that I run for myself, but kind of at a high level, let's talk about what's going on here. Last week, sell-off in equities focused in the growthier areas of the market, things like technology, things like the ARC thematic growers, if you will. No earnings, but a lot of top-line growth. Those stocks were hit hard as rates were rapidly rising, and the alliteration there is on purpose. So let's talk about what that means. Number one, I wrote in a note over the weekend that when we see a fast spike in rates the way we've seen, I used 21-day rate of change for the 10-year yield and said, what happens to stocks when that rate of change is greater than 30? And here's what's interesting. Stocks wobble in the near term. And that's what we lived through last week. We may potentially still live through it. Generally speaking, it's about 13 to 16 days of kind of wobbly markets, whether it's SPY, IWM, or Qs. But then when we look out to the 3 and 6 month timeframes, we see some really good performance. Generally speaking, higher 90 to 100% of the time for all three of those ETFs across the 3 and 6 month high timeframes with some good returns. The caveat is N equals 11 here, so not a huge sample size, but I wanted to kind of look at what goes on, what potentially happens. And what I think happens is this: the initial spike in rates, I've said this in the past, the market can withstand higher rates, the equity market. What the market doesn't like is higher rates quickly. And that's what we had last week. And that's what we had over the course of 2 weeks, or 21 days really, based on the analysis that I did in a note that I wrote for clients yesterday, Sunday. And then what happens is the market, I think equity investors start to come to grips with what those higher rates are discounting. And the higher rates are discounting better economic growth, right? Let's start to draw the line. Better economic growth, better top line growth, better earnings growth, higher stock prices over time. That is probably an oversimplified way of looking at it, but it's a starting point, it's a framework. The question is, where do we look? I don't think it's anything new to say that the economic environment's getting better. We've been talking about it. Others have been talking about it. You're seeing it in markets, whether it's commodities ripping topside, whether it's financials in particular, the banks working, whether it's the energy stocks working, right? The cyclical rotation trade is on, has been on. It's not new. It's really been on since November when the vaccine news started to hit, and it's just kind of accelerated to the upside with this spike in rates last week. What's interesting to me is those themes are now overbought and stretched to the upside. At the same time, the growth themes are oversold. Markets in general, because they are levered to mega cap growth here in the US, oversold. SPY is oversold. Qs are oversold. Even IWM is oversold here in the near term. We talk about identifying where are markets within the context of their trend. Well, the trend is up. We've been talking about that for a while. Where are we within that trend? Well, we're oversold. For 2.5 weeks, we were overbought, right? And I use overbought, oversold. The analogy I use is know when to lay back, know when to attack. You're in an uptrend. Great. Overbought an uptrend, lay back. Lay back. No need to be aggressive. Oversold in an uptrend, attack. Look for opportunities in leading areas of the market. Now, what's good is that leadership's been broadening. It's been broadening out. Right now, the cyclical rotation names are overbought. Fine. I am sure that there are plenty of small, mid, and large cap growth opportunities that are still outperforming that are oversold. That's where the focus for ideas should be this week, in my opinion, in the US equity market. Away from the US, I still see scope for outperformance outside of the United States in global markets, with a particular focus on emerging markets, with a particular focus on Asia. Those are two themes that I have been writing about and talking about a lot. Don't see any reason to change those views. We'll stick with them for now. Fixed income, treasuries are oversold. They're oversold. There's no two ways about it. I started to talk about this late last week. I'll reiterate it again. Treasuries are oversold within the context of a downtrend, and in our ETF model, they are bearish and very bearish. Fine. Might they rally here? They could, but the trend is still down. Ultimately, we're going to want to see what happens subsequent to a near-term rally, should one play out, to kind of determine information and path of least resistance going forward. Finally, I touched on this a bit. The commodity trade is overbought. It's overbought. DBC is overbought and into resistance. Different pockets of the trade are overbought, with the exception probably of precious metals. Gold is not overbought, but gold is breaking down. So those are my high-level views coming into this week. I think it makes sense to, in the context of know when to lay back, know when to attack. U.S. equities, I think we're oversold in an uptrend. That's attack. Commodity theme, and parts of the equity market leverage to the commodity theme, overbought in an uptrend. Lay back. Treasuries, oversold in a downtrend. Probably makes sense to watch them. Global markets, oversold in an uptrend. That's the high-level view across 4 key asset classes. The kind of outlier here is the dollar. Not really outlier, but didn't really touch on it too much. The dollar is stabilizing within the context of a downtrend. Some of the commodity currencies are extended to the upside, i.e. outperforming the dollar. So it kind of lines up with the view that we're seeing here in commodities and commodity levered equities. But not a ton of information that I've been able to glean. I know a lot of people are talking about the dollar. I'm not picking up anything meaningful there one way or the other than to say, UUP is consolidating within the context of a downtrend, trading around $24.50, maybe some upside to $25. Doesn't excite me all that much, but I am watching it because I do think it could be impactful if this consolidation does break. So that's what's on my radar screen to start the week. I hope that everybody had a great weekend. Be well, be safe. We'll come back to you soon with another update. Talk then.